Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 27th of January. I'm Daniel Lam, your host for the podcast. Now, last Wednesday, we spoke about how the yen has been underreacting to the recent pullback in the US dollar. We argued that the potential rate cut, which indeed happened, from the Bank of Japan last Friday, had already been more or less priced in by the markets. Now, indeed, the dollar-yen has been in a very narrow range for the last 7 sessions, from just under 155 to just under 157. Now, technically, from indicators such as the RSI and the ADX, it is not pointing towards significant downside here. So perhaps range trading to very mild downside is the likely scenario in this case. Now, I understand that the strong labor market creates sustained domestic price pressures in Japan. So therefore, the BOJ signaled a hawkish bias by raising its inflation forecast. The committee remains on the lookout for wage price spiral in a context where inflation has become sticky and is re-accelerating above target. Moreover, wage growth is strong and market-based inflation expectations are rising. But this is a balancing act also, because there's a risk that the BOJ may raise rates in smaller increments, such as 10 to 15 basis points, because there could be concerns that smaller businesses may struggle to raise wages in tandem with their larger counterparts. Also key to this, of course, is the path of the yields in the US, which is critical for US-Japan interest rate differentials. So for example, the US 10-year Treasury yield has pulled back from its highs earlier this year. Now we know that Trump's desire is to try to create non-inflationary growth. So this US 10-year Treasury appears to be kept for now, with next support around the 4.4% level, which is roughly 20 basis points down from here. Now, taking all these together, it would support a range trading or mildly down dollar-yen for the near term, which is consistent with our 3-month target at 153. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.